sales, then we'll move forward with a conventional loan if it's over the 680, and we get the automated underwriting approval. And then we'll check the income limits, right? So if their qualifying income is going to be under 80% of the area median income, then they'll qualify for Home Ready or Home Possible. Fannie and Freddie's affordable housing program. We'll try to get them into that, because then they'll reduce the mortgage insurance and they won't have any credit adjustments, or not as much credit adjustments. So the rates are really good. And if we can't meet any of that, then we're putting them into an FHA loan.
Okay. So when you talked about, seeing how you can improve somebody's credit, what are some of the products that you use to assist you with that?
So yeah, I mean, we automatically will look at the credit assure, I think it's called. So it tells us the potential increase. And so it's the first thing we look at. It's right there on the credit report. It shows you the potential increase. And if it looks like it's something that's going to benefit them, so if they're sitting in the 620s and we see that they can get up 30, 40, 50, 60 points, we'll run that analyzer. So we'll use the Wayfinder, which will tell us what exactly they need to do to hit that point objective. Or we'll use the what if simulator. If there isn't enough improvement through the Wayfinder, you can actually use the what if simulator and extend out the time. So maybe it's adding a credit card, which you can't do a rapid rescore when adding a credit card. You have to, let it season for a month or 2 or 3. And so we'll look at the different timeframes and see what kind of impact that'll have on the credit scores. And some people, they have to wait 6 to 12 months before they're able to do anything. We'll call you and say, hey, we can't figure out anything to do here. Any recommendations, right? So, that is a huge tool. We utilize it every single day. We do a lot of rapid rescoring for clients that might have something on their credit report that shouldn't be there, right? So we'll have them reach out to the creditor, get us a statement that, says this is being deleted at the credit bureau level. If they give that to us, we can get our rescores back in as little as 2 or 3 days, depending on the bureau and how busy they are. Yeah.
Excellent. Now, when you get somebody pre-approved, you guys go through like the full pre-approval process.
Yeah.
And say they're on that cusp of that score increase, would you switch them from, say, an FHA loan to a conventional loan during the process, or the way the market is today, is that too risky?
No, it's something that we want to do because, let's just say they're pre-approved for an FHA loan at $300,000, right? They're putting in a ton of offers. They're not getting accepted because there's this ridiculous perception out there that FHA loans are bad. And so listing agents aren't accepting FHA offers, right? So while they're pre-approved and out there house hunting, we're still working with them to try to get them into a conventional loan. So we're using that what if simulator to tell us, okay, if they're pre-approved for 3-4 months FHA, well, maybe now after that 4-month period, when we got to update their pre-approval, maybe they're now ready to go conventional, right? And so we'll flip them into a conventional loan, which makes their offer more attractive to the listing agent and the sellers.
So realtors still have a negative.
More so now than they have in the past.
Really?
Yes. Yeah. I mean, first questions they're asking is it a government loan or is it a conventional loan? If we say conventional, like, oh, okay, good, we'll look at that one. If there's multiple offers, they're tossing out the government offers.
And it doesn't really seem, well, I wouldn't say fair, but I mean, the misconception of it.
That's the problem. It's this perception that it's a negative is ridiculous. And I get it from an appraisal standpoint. Maybe they're a little bit more strict on condition on an FHA and VA loan, but not really. I mean, it's not
a lot,
no,
right?
Not,
I mean,
when
the FHA loan requirements, the house has got to be just like a stable house,
right?
Like
maybe some chipping paint and things like that. They're asking you to scrape and paint, chipping paint, but other than that, the conventional is very similar. Conventional appraisal is very similar to FHA.
Okay. Are we seeing appraisal issues right now?
Yeah.
With some of these prices?
Yeah. I mean, we're on these Facebook forums with real estate agents and lenders, and there's constant complaints about appraisals coming in low or just, not willing to, work with us as an ally. It's more of an adversarial relationship, which is really a shame because we all have the same goal, right? Help more people get in homes.
Right.
And so, if we have, appraisal that comes in $20,000, $30,000, $40,000 low, and the listing agent comes up with some new comps, good comps, and and submits them, and they're just like, no, we're not changing it. It's like, well, let's be reasonable here, you know? So we have an internal team of appraisers that works for First Home that will analyze that and help us, you know, that's their expertise. I'm not gonna profess that I have this, you know, knowledge of appraisals and what the values should be. So I just lean on them to help us figure out what's acceptable to kind of dispute and, you know, try to get a recertification of value or reconsideration of value. And that happens a lot on VA ones as well. Yeah.
Now, if there is no reconsideration of value, you'll still lend off the appraised value, but what does the borrower have to do after that?
Yeah, so right now you're seeing, you know, it's crazy times with people going 20, 30, 50, $100,000 over the asking price and waiving the appraisal, or at least saying, I'll pay X amount of dollars over the appraised value. So we'll lend based on the appraised value, right? So let's just say it's $500,000 purchase. They go in at 550, it appraises for 525. Well, our loan to value is gonna be based on 525, and they're gonna pay that extra in cash, that $25,000 difference in cash.
Okay, and then when you're talking to a borrower and you're talking about all these contracts, as far as the contingencies being waived, so you have the appraised value being waived,
Yep,
home inspections being waived as well.
they are.
How about mortgage contingency? Is that still there, or is that being waived as well?
Some of them are waiving the financing contingencies. So yeah, that's normal. It's crazy. I never advise our clients to do that ever. Yeah. But the winning contracts are typically waiving contingencies, especially in, you know, some of the high dollar markets, DC, Montgomery County, you're seeing a lot of that.
Okay, so when they're in the process,
Mhm.
right? What are some of the things you tell them not to do?
Yeah, I mean, I think we've been saying it for however long we've been in this business, 20 years now for me. You know, I always say, we're gonna do whatever we can to not screw up your own loan, right? How to avoid mortgage sabotage is one of the things we're constantly talking about. And that is not opening up any credit, not going out and buying a car, you know, not increasing your credit card bills, not financing furniture, or not switching jobs. Like there's a lot of things people do, and people still do it. We have a client that just got a $10,000 cash gift, and it caused the problem, right? No cash deposits. You know, if you're going to get money from somebody, I tell the clients, any financial decision that you are going to make over the next 30, 45 days, you have to ask me first. You have to call us and we'll talk about it and put a plan together.
Right.
That's it. It's that simple. You're going through a process where you're borrowing $300,000, $400,000, $500,000, $600,000. Ask permission, because begging for forgiveness in this industry doesn't work. Doesn't really work.
And then to make them realize not only, all right, don't do these things, but with the advancements in technology and reportings that we get on the credit reports and all the notifications that we can get, yes, we are 2 hours before your settlement, you go to Raymore and Flanagan and buy furniture, we're going to find out.
That's right. Yeah. So you know as well as I do that we get those